Welcome back. Well, we've seen some volatility in the markets this month after the AI boom helped them melt up in stocks all year. Investors are now looking at valuation concerns. You've got some top bank CEOs warning of a possible market correction to come. Goldman Sachs and Morgan Stanley among them. And then there's AQR Capital's Cliff Asness yesterday saying that U.S. stocks are historically expensive, but they are not in bubble territory. He's calling this a market where investors are paying up for their favorites. Joining me now is Merrill Wealth Management President and Bank of America Executive Management Team member, Eric Shimpf. Eric, it's great to see you. Congrats on your business.
Yeah, thanks for having me back. It's always good to be here with you.
Yeah, and it's good to see you at a time of the markets where people are feeling bullish about the backdrop. What's most important to you when you look at this markets? What do you look at in terms of getting that sentiment feeling?
You know, the markets are in a really good place. And I think, there's sometimes markets just want to feel like they want to continue to go. And it just feels like we're in that space right now. But I think the market likes clarity. And we're seeing that with the shutdown, hopefully, being resolved. There's still a tremendous amount of cash on the sidelines. The consumers are spending. Companies are spending. So CapEx is real. I don't know. We'll see how we get, some help maybe from the Fed before the end of the year. I don't know, to be debated, but I definitely think we'll see something in 26. So it just continues to make a backdrop for this market to continue to go. Well,
it's about trust and investors' trust, Merrill, and you've got $4 trillion in assets. And even with all of that AUM under your umbrella, you still have a lot of cash on the sidelines.
We do, and you said it exactly. My business is really one thing. It's the relationships our advisors have with their clients, and that is centered on trust. We had our investor day last week as part of Bank of America. We mentioned closing in on $4 trillion, and there is a fair amount of cash in that $4 trillion sitting on the sideline, which we think will eventually take risk. Risk will come on, especially if interest rates start to come down a little bit. That cash has got to go somewhere, and as long as you're having discussions with your advisors, understanding what your personal needs are, I think this has still got plenty of room to go.
Well, it's interesting that you had this investor day the other day. A lot of conversation on Wall Street about the investor day because it was the first investor day in what? Decade, right? Plus.
Yeah, 13, 14 years.
14 years without an investor day. What was the reaction? Do you feel that was required because you wanted to give the investment community a look at the strength of B of A?
For sure. First of all, I love being part of Bank of America. It's a fantastic place to work. But when I look at it at the end of the day, the big takeaway for me is I think we were clearly able to show the investment community how the lines of business of Bank of America come together to serve everybody. There's 69 million clients of Bank of America. Not all of them are Merrill clients. They could be, and I think a lot of them should be. So I think we really highlighted the potential for our great company just to kind of continue to work together.
And you've got billions of dollars flowing into technology and data centers, AI, shaping the markets this year. How are investors feeling right now in terms of that trade? Is that still your number one trade, do you think? Is that where you want to be invested? Or do you think people are worried now that valuations are getting out of hand?
No, I think it's still a place to be. I don't know if it's the number one trade, right? Asset allocation works and having a well-balanced portfolio. There's a tremendous amount of interest in the space in terms of artificial intelligence. We see the companies still spending, still investing. I see the investing we're doing. And I think it's time to start to see some of this productivity that we're hoping to achieve by the investment in artificial intelligence come through. In my business, it's on our advisors' desktops. I can see things like pre-meeting preparation, post-meeting implementation. The technology is making a difference. And then it's the data centers, it's the chip makers, so I still think there's room to go.
So tell me how you allocate capital right now in terms of what investors want. And are they all long-term, or do you seeing a fair amount of traders?
No, I mean, my business is really, again, an individual thing based on a relationship, advisors have with clients. So it comes down to that individual need, and we definitely tend to sort of have a longer-term view as to what a portfolio should do for people. Asset allocation works, and I think we're also sort of in a market right now where some of the old adages work. Dividends work, buy and hold works, buying on the dips. They're not just silly sayings. They're actually things that work, and we think clients should be invested, adding risk on some weakness or on some dips, and we think this thing's got still plenty of room to come.
How do you get even more scale? I mean, $4 trillion in AUM is a serious scale, but Merrill Wealth Management targeting stronger organic growth. So where does the organic growth come from?
And I talked about that along with my partner Lindsay at Investor Day, thinking that we can grow that organic growth 4 to 5% a year, which is, is a big number. It comes down to really three things: giving more advice to more Americans, and that's the power of our advisors, so we'll continue to grow that network. I touched on it for a second, the power of Bank of America. Again, 69 million clients and customers of Bank of America. Not all of them are Merrill, and they should. And then it comes down to doing more with the clients that we have, expanding that, asset allocation that I talked about. Alternative investing, for example, you talked about data centers and artificial intelligence and things like that. Only 15 to 20% of the markets are public. So giving more access to private markets and things like that. So just really doing more with clients and then hopefully attracting a whole bunch of new ones.
Well, I'm glad you mentioned this because privates, alternatives, these are all great strategies and for a long time have not been available to individuals out there. So give us the scope of products that individuals actually can be looking at and institutions, because it's not just straight vanilla equities anymore.
No, I mean, asset allocation definitely includes, alternative investing right now. We write research on it across, all risk tolerances. So even, someone with a really low risk tolerance, I still think has to have some minimum exposure to alternative investments. And it comes in many different ways, many different sectors, artificial intelligence, private credit, professional sports. Again, only 15 to 20% of companies today are public. So
where do you think the growth story of 2026 is?
I think you're going to see some help from the Fed, so the markets will continue to get some benefit from interest rates. I think the market is going to benefit from clarity. I think there's plenty of room to go for a well-balanced portfolio here in the United States.
Wow, I like it. You are bullish, and certainly the backdrop makes you feel that way, right?
I feel good.
Look, Eric, today is Veterans Day, and I want you to tell us a little about your journey, because you've gone from the military to leading one of the country's largest wealth management firms. It speaks to the value that veterans bring to corporate life. Walk us through your journey, and thank you so much for your great service to this wonderful nation.
You're welcome. And I have to say, I've been watching the show all morning, and just what you're doing to highlight veterans today, and for your viewers, just I wish them all a happy Veterans Day. But it's true, I left the Army on a Friday, and I started at Merrill Lynch on Monday.
Wow. And how did that happen?
I was just fortunate enough that at the time, Merrill and Bank of America are interested in hiring veterans. Bank of America's hired 20,000 veterans since 2015. We just committed to do another 10,000 in the next 5 years. Veterans make great teammates. They're loyal, they're hardworking, they know what it means to be on a team. They understand maybe long hours and challenges sometimes. Whether it's financial services or really any industry, I just would hope all viewers would give veterans an opportunity to come work for them when they're done serving our country.
Well, you make a great point in terms of understanding the team, but let's not forget courage and leadership, which are so important, and veterans bring that to any organization. Eric, thank you. Congrats to you.
Thanks again for always having me on.
Great to see you. Eric Shimpf, Merrill Asset Management. We'll be right back. Stay with us.